Today, we'll reveal the most reliable way to trade opening range breakouts using just 2 free Tradingview indicators. As an extra bonus, at the end of the video, we'll also explain how to adapt this strategy for crypto trading. Let's dive in. The opening range with breakouts and targets by LuxAlgo. This indicator creates a dynamic trading framework based on the market's opening range. It identifies the high and low points during a configurable opening period, default 30 minutes, then uses this range to establish support and resistance levels and calculate potential price targets. The indicator displays the opening range as a highlighted box. When price breaks above or below these levels, the indicator can generate visual breakout signals. As price continues to move, the indicator automatically calculates and displays target levels at specified percentages of the original range. A notable feature is the daily bias option that considers the relationship between current and previous opening ranges when generating signals. When enabled, signals only appear in the direction of the current day's bias, bullish when today's opening range midpoint is above yesterday's, bearish when below. The indicator also offers an optional session-based moving average that resets at the beginning of each session, providing additional context for price action relative to the opening range. Volume-based buy and sell momentum by 2TM created by Sion. This indicator combines volume analysis with price rate of change to measure buying and selling momentum based on relative volume changes. The indicator separates price movements into 2 distinct components based on whether they occur on increasing or decreasing volume. The calculation methodology tracks the cumulative rate of change, ROC, of price, but segments this accumulation based on volume behavior. Visually, the indicator displays the combined momentum line against its moving average, with color-coded fills showing whether current momentum exceeds the average, blue, or falls below it, red. This creates an intuitive visual representation of strength or weakness in the current price movement. Trading strategies using this indicator might focus on momentum confirmation, where traders look for alignment between price direction and the momentum color. While the opening range breakout indicator is a powerful tool, using it on its own can sometimes lead to poor entries, especially when trades are taken against the broader trend. This increases the risk of false breakouts, small stop-outs, or missing more substantial moves. To make the strategy more robust, we use the volume-based buy and sell momentum indicator as a trend filter. This ensures that breakouts are only traded when there's clear momentum backing the move. To reduce market noise and make trend signals more reliable, we set the momentum indicator to a higher period. In this case, we're using a 150-period setting, though you're free to experiment with what works best for your market and time frame. A higher setting helps smooth out short-term fluctuations and gives us a clearer view of the dominant buying or selling pressure. For the ORB indicator, we're using the 15-minute range and turn off all breakout signals and price targets, keeping only the opening range box visible. This keeps the chart clean and helps us focus on structure and price action, rather than relying on automatic signals. Now let's break down how the actual strategy works. For a long setup, we first wait until the momentum indicator confirms an uptrend. This happens when the momentum line is above its moving average, and the area under the line is filled with blue. We don't enter trades during transition phases, where the trend isn't clearly established. Once the uptrend is confirmed, ideally, we want to see at least one clear rejection of the momentum line off its EMA, confirming continuation in the trend direction. We then look for a price breakout above the opening range high. If the momentum indicator still confirms bullish pressure at that point, we take a long trade. The stop loss goes below the opening range low, and the take profit can be based on your preferred risk-to-reward ratio. Regardless of how the trade performs, we always close the position by the end of the trading day to avoid overnight risk. The same logic applies to short setups, just in reverse. We wait for the momentum indicator to turn bearish, when the line drops below its EMA and the fill turns red. The trend is only confirmed after at least one clear rejection of the momentum line off its EMA, reinforcing the bearish direction. Once this is in place, we monitor price action around the opening range. If price shows weakness and breaks below the range low, while momentum remains bearish, we enter a short trade. The stop is placed above the range high, and we manage the trade using our preferred risk parameters, always closing the position by the end of the trading day. This combined approach works especially well on intraday timeframes, such as the 1-minute to 15-minute charts, and is most effective in liquid markets like futures, forex, or high-volume stocks. By aligning breakout entries with momentum, we significantly reduce the chances of trading against the trend, making this strategy far more reliable than using either indicator alone. This strategy also works well for crypto with a few simple tweaks. Since crypto trades 24/7, we use midnight UTC as the sessions start to define the opening range, keeping the default 15-minute period. You don't need to trade at midnight, just let the range form then and watch for breakout setups during your preferred active sessions, like the London, New York, or Asia opens. Avoid low-volume altcoins, as inconsistent volume data can weaken signal quality. Apply the same core rules. This setup works best on 1 to 15-minute charts during high-activity periods, where breakouts often trigger strong intraday moves. In our previous video, we reviewed 5 advanced Tradingview indicators with strategies coming your way soon, so you'll definitely want to take note of them.